Right, good morning. Hello, everybody. It's that's not the 7th of August, as my slide says. It's the 7th of September, indeed. And today, that's not very good, is it? Good start. Today, we're going to be talking about the week ahead. We've done the week ago. We're going to be doing the week ahead from the 7th to the 11th of September. We're going to look at the main events on what is actually really quite a quiet week this week. My name's Adrian Boothie. I'm the head of trading here at Trend Signal. And as ever, I'm joined with our chief analyst, Jerry Miller. Hi, Jerry.
Hello all, hi.
And Jerry's going to take us through really the main events for this week. So, Jerry, why don't you get us all started? What don't we know yet? What's going to be happening? What are the main stimulating events for the week coming up?
Well, curiously, following non-farm payroll week, which happens on the first Friday of the new month, which was last Friday, the calendar always seems a bit bare the next week, and obviously it happens the same every month. So this is not a surprise, but we've got the added issue, I suppose you'd want to call it. It's a federal holiday in the US today, so it's Labor Day where all the markets are shut, which then makes it very much a truncated week for the US. And bearing in mind, we've had a keen interest in what's actually happened in, with the tech shares Thursday, Friday last week. So we're all really keen to know as much as we can about what's going to happen this week, and we're going to have to wait until Tuesday for that. But so yeah, bank holiday in the US for today. Big event really is Thursday with the European Central Bank's policy meeting, but we've also got Brexit bubbling away in the background. There was a lot of talk in the press over the weekend about Frost saying that, he's our negotiator, saying that if we don't get a deal, we don't get a deal, but we need to stick to what we know is right for us. The fact is we've gone through Brexit. We want the benefits of what Brexit entails, and I think Barnier has been saying that not enough concessions have been made by the UK. I think he said he's worried and disappointed, but I think, both sides could say that. I'm sure Mr. Frost would also say that he's worried and disappointed by the lack of concessions from the UK, from the EU. But I think there are rumours that Barnier might actually be sidelined for part of the discussions in an attempt to try and break the deadlock. I don't know whether you've heard that.
No, I haven't, but I'm not quite as well read as you are, Jerry. So,
well, hey, listen, I think it needs something, and Barnier is often very sort of methodical and lacks a bit of empathy, from what I understand. So. Maybe that is something that will shake it up a little bit. But anyway, that's this week. It's the final phase of negotiations, and the UK have just said that they've got to get a deal. If it's not done by, mid-October, it's not going to happen. But as we know, the EU tend to wait until the 11th hour, the 59th minute of the 11th hour, and so I'm sure that's what will happen this time round. And if there isn't a deal, then we'll work out the ramifications for that. But
well, the good news is that there continues to be some good movement on the on sterling across a number of crosses. So there's been some good movement, some good trading opportunities. So anything that's going to create that movement is good for traders, quite frankly.
Yeah.
I was asked earlier about whether we'd do some, from one of our students in our training workshop this morning, about whether we'd look to put notices out about not trading the pound for a while. Not at the moment, and I think maybe when certain announcements coming up, I think maybe we'll look to abstain for a few days over those announcements. But otherwise, it's creating good movement and good opportunity. Even if you're in those trades for 2 or 3 days, there's a lot of potential in those.
I think if you weren't to trade sterling because of Brexit, you would be trading it for 4 years. That's I think there are very few reasons not to trade a market. I think an election is a very good one, and I think come the 2nd of, or was it the 3rd of November, with the presidential election in the US, that'll be a time to tread carefully. Absolutely.
But I think coming into the data, into the announcements, is a good time to be trading, and then you trade the reaction. But actually, it's on the point of the announcement. It's when these things are actually coming out that you want to be flat, because that's the uncertainty.
Correct. That's right.
Okay.
So Wednesday, next on the agenda is another policy meeting for a central bank. This time it's the Canadians, the Bank of Canada, with their policy meeting and their rate statement. There is absolutely no chance of any move. They tend to watch very closely what the US does, Adrian, and there's been no change there. And I think it's so unlikely that there will be any change there. Sometimes the statement can ruffle the Canadian dollar a little bit, but we don't expect too much in the way of surprises there, which sort of brings us on to the main event of the week, which is the European Central Bank's policy meeting. We do have a bit of data out before that, actually, in the Eurozone, which might help the Eurozone, the European Central Bank, I should say, in its policy decision. We've got industrial production for Germany, France and Italy, although it's not showing there. But as a lot of data doesn't tend to show on Forex Factory, they tend to relegate a lot of it to low impact. But there we go. Yeah, you've highlighted some of them.
Yeah.
Good. So the European Central Bank, well, that comes out later. The announcement is at 12:45, and then the press
time,
and then the press conference at 1:30 is going to be interesting. Christine Lagarde, the chairperson of the European Central Bank, has made a few off the record comments apparently about her concern about the strong euro and its effect on the Eurozone economy, because it acts as a drag on economic activity, as companies are finding it that anyone selling its services or goods outside the Eurozone will find that their goods now cost more in those other currencies, and that affects their margins and their profitability, or even their ability actually to close a sale. So it has a negative effect, and that's something that she may want to comment on, or it's likely that she'll comment on, and that could put the skids under the euro, possibly.
Okay, and then we also have, so in the States we've got PPI 130, so it's always say that always used to be a high impact item of data, didn't it? A red item. Again.
Well, it's basically the producer price index is the cost of goods and services going into production. So to make a car you need metal, and it's the cost of the sheet metal that's going into production. And if that goes up in price, it can push up the price of the finished product, i.e. the cost of the car. And it's the core PPI we look at, but there's really no sign of any move in the producer price index, which is often a leading indicator of any inflation to come, because we got that data on Friday, Adrian. If you just move to Friday, you can see that we got the CPI data out. That's the inflation data in the US. And it's interesting because the Federal Reserve, that manages price stability, or that's one of its mandates, has changed its attitude to inflation, the CPI reading, and it's going to allow it to rise above 2% without taking any action. And it's going to look at an average of the CPI over a period of months, and it'll help to sort of smooth out reactions to jumps in inflation that might be temporary. But of course, the Fed and business leaders would love to have inflation back up, because two things with inflation. One, if you run a business and you can push your prices up, you can invest more in factories and people and research and development. But if you know that you've got no pricing power and you can never push your prices up, you know that you're not going to be able to increase your revenue by the quick win of a price rise. And the other thing that's also important, all these massive amounts of debt that government have issued over the last 6 months to fight the pandemic, that inflation reduces it in value. And that's what central banks and governments would love to see for that reason alone. I got a funny feeling as I drift into my retirement in the coming years that inflation will start to pick up. But I may not be around to worry about it too much, if you know what I mean.
Yeah. Okay. Well, I think that's pretty much it then, Jerry. Yeah.
It's a pretty uneventful week in terms of those data releases, Adrian.
It is. However, if you are a day trader, there's certainly a few things to be aware of. For example, if you're trading the euro dollar or the DAX, be very aware of 12:45 and 1:30 on Thursday. You want to have closed out positions there, would be the more prudent thing to do, and then look to evaluate and trade the reaction after that. That way it becomes a lot more interesting. The risk associated with trading on data with slippage and gapping can be quite problematic. So just be aware, everybody. Stay safe with your trading, manage risk at all times, etc. Otherwise, everybody, will be back this time next week. Well, for more of the same, I suppose, but hopefully a few more events to discuss as well. But have a great week's trading, everybody, and we'll see you next time. Bye-bye for now.